Welcome to Killik & Co.'s podcast for the 22nd of July. Last week we saw stock markets moving further ahead. Indeed, in the S&P index we saw record highs achieved last week. This followed virtually 10 continuous days of gains on the S&P. Indeed, the day of the 10th would have been the first time that had been achieved for over 10 years. Actually, it failed on that day, but quickly resumed the upward trend towards the end of last week. This followed a two-day conference, speech, questions and answers from Ben Bernanke, which really continued the theme that we've seen so far of mellowing thoughts towards Ben Bernanke's tapering of QE. It certainly has seen an easing in 10-year yields on the US bonds and, as I say, allowed equities to resume the upward trend. Whereas in the last couple of weeks it's been heavily focused on economic data and forward-looking guidance, including numbers such as inflation and retail sales for the UK and US, this week attention turns very much back to the corporate sector, where so far the US companies that have produced have generally met or slightly missed on the revenue line, but continued to do well on the profit and earnings per share line, which I think is demonstrating that cost control is still the order of the day. Turning to the diary for the coming week, really just to highlight the sort of number of good quality blue chip companies that are reporting here in the UK on Wednesday. Arm Holdings, GlaxoSmithKline and Easyjet pushing through £14 for the first time as of last week. Later in the week, Unilever reporting. There has been a few cautious comments around on Unilever. One of the big attributes of a company such as Unilever has been its exposure to emerging markets and emerging growth markets. But as emerging markets have had a little bit of a tougher few sessions over the course of the last 2 or 3 weeks, there is a question mark about slowing growth in emerging markets and some neutral comments coming out in Unilever. So again, looking forward to that particular slot. BG Group on Friday, that stock is doing quite well at the moment, as are some of the mining stocks, which appear to have turned the corner at the moment. We'll take a look at a couple of those charts in over the course of the presentation. So really starting off with the miners, and as we can see here, this is a 1-year chart of Rio Tinto. Last week we saw some industrial production numbers from Rio Tinto, in particular on their iron ore side, which were quite encouraging. Certainly production up around about sort of 6%. The cost controls and disciplines coming into place under the new CEO. The whole sector, as we know, has been particularly weak since the start of the year relative to a stock market that has been going up. It has been very much the underperforming sector, but just really feeling from as indicated on this chart that we may have seen the low for the near term, and a bit of interest coming back into the sector meant that Rio's and Billiton were featuring on the relative strength list for the first time for some time last week. So maybe a sector to watch in the near term. This is Billiton, very similar profile to Billiton's chart, that sort of strong surge over the course of the month of July. S&P, this is a long dated chart. This is a 10-year chart, really just to try and highlight the fact that we burst through the top end of the range on the S&P last week. Certainly not been reflected in the UK market at the moment, or certainly not in the FTSE 100, but some of the smaller stocks have been, or mid-cap stocks have been certainly moving well. WPP for me has been a highlight. Publicis last week, one of their main rivals, published some very strong numbers for Q2, and the read across for WPP was pretty powerful, and it certainly meant that it was nudging through £12 last week for the first time, and showing some good signs of relative strength there at the moment. This is the mid-cap sector. This is the FTSE 250 for the UK. And again, performing a lot better on a relative basis than the FTSE 100. But of course, if those miners do carry on their recent run of outperformance, then we could see the FTSE 100 playing a little bit of catch-up over the course of the next few weeks. But nudging towards the top end of the range for the FTSE 250. One of the interesting signs is that we saw a brief spike in the level of volatility in the stock market as measured by the VIX during the course of June. June. This was on the back of that very strong movement or counter movement that we saw in the US 10-year Treasury yields following Ben Bernanke's talk. But really just to highlight that the volatility has since receded and is back now down close to 12, which has been very much the low end of the range for the course of the last year. So certainly that bout of volatility for the time being looks over. In terms of Japan, again, just worth highlighting that we saw the elections last night, which showed very strong majority in both houses for the president there, and that was greeted with some cheer in equity markets initially, but a strengthening yen did take away some of those gains that were seen in the Nikkei, with the Nikkei closing pretty much flat on the day. But nevertheless, the trend for the Nikkei seems to have recovered from its bout of weakness, again as risk money came off the table temporarily during June, but that strong upward trend looks like it's been resuming through the course of the last month, and may well on the back of last night's election carry on for the next few weeks.